The CIO of Global Equities at Allianz Global Investors is Lucy Macdonald, and she joins me now. Lucy, we're in this world where many people say there's very high asset prices and low to no growth. How can fund managers make money for clients?
It's a more challenging environment for sure, because equity markets have got to a higher level of valuation and the growth picture in the background is quite moderate. So from our perspective, you need to be more active, you need to have more conviction in the positions that you have, and you need to really look below the surface of the countries and the sectors to see which of the subsectors which are offering growth. And whether that's in technology, looking and seeing the cloud, business transformation, or whether it's in healthcare and looking beneath the large companies to see where you've got growth in spending, and that can be diagnostics or sequencing where you've got some explosive growth happening. You really have to try a bit harder in this environment.
Right. So it's about subsectors and stocks is the crucial thing here.
Very much so.
Okay. And as you look at the markets at the moment, are there any risks that you think markets in general are being complacent about?
Well, we've got a couple of political risks coming up this year that we've been spending a lot of time talking about, and it's difficult to see how much is priced in because we don't know what the outcome is going to be. That, I think, having been said, once we get through those two political risks, the biggest financial risk, which is probably more important in the long term, is what we're going to do to get out of the quantitative easing environment we're in. And that is the biggest source of volatility as we look to see how interest rates can begin to normalise in the US. And that's going to continue to be a source of uncertainty for markets.
What would you say is a normalised level of rates in the US, if we could take all this QE out of the system?
Well, to get towards a 2% in the US, if you think that's the long-term nominal growth in the US, that would be about right. So we've still got a long way to go. And our best expectation is it's going to take some time.
And what would you say markets are getting overly fussy about in terms of risk?
Well, at the moment, not very much.
Right.
You've got an interesting environment where overall absolute levels of valuation are quite high, but within that you've got quite a defensive positioning. So if you look at the areas which have been doing particularly well, they have been things like gold, things like consumer staples, which are all sort of relatively low beta defensive areas, and they've been really leading the market. That doesn't suggest over optimism. So where are people being a bit complacent? It could be in the valuations of some of those areas, which do look quite high by historic terms.
So summing it all up, where do you see the best value in equities for 2016?
Well, I think finding some of those growth areas where the expectations for growth are not long-term enough. I think that's the most interesting thing to be doing in the medium term. We can't do much about the politics as investors. We can take a view, take a little bit of a cautious view ahead of these events, but you really can't build a portfolio around these events. So what you need to do is be thinking, further, longer term, 3 and 5 years, which are the companies which are going to be driving alpha in the medium term, and those are the companies which we want to be investing in the medium term.
Lucy Macdonald, we have to leave it there. Thank you.